Hi, and welcome to Tea on Tax Tuesday. Today we're going to be talking about partnerships, how they're taxed and how they're registered on an individual's tax return. So, here we go.
With a partnership, here's an example of a partnership I've done for a client. As we can see, we go through all of the business information, work out all of the income, all of our expenses, but it is not its own entity, not like a company and not like an individual. So we need to think of a partnership more like a business. So this business has two partners, and therefore profits are distributed to the partners in equal shares. Therefore, once we've calculated what the total net income or loss from the business is, it is then divided into each partner. So as we can see here, partner one has a 50% percentage, owns half. Therefore, their taxable income, which is going to be distributed to them on their individual tax return, will be $23,733. Now we see the same again with partner two, the same amount. So the way this works is, once we've worked out that we have a partnership, it's in a business in a partnership structure. So we've got Bob and we've got John. So just for simplicity, we're going to say that the distribution of profits was $25,000. So Bob gets $25,000, John gets $25,000 to claim on his individual tax return as the amount of income that he has earned during that financial year. So what does that actually mean? Well, if you remember in my previous video, every individual gets first $18,200 tax-free. Therefore, Bob, or partner one, would then work out what the tax is due on that amount. So $25,000 less the $18,000. So taxable amount $6,800, which we know is taxed 19 cents per the dollar, meaning that the tax is therefore calculated $1,292 at the individual's level of stage. Now this isn't taking into account Medicare or any other personal circumstances. So this is a very general overview of how that works. So as we can see, there is a division of the profits to each partner. Now, with the distribution of the partnerships, it is taxed separately, and there's also lots of other things that are going to make the distribution different for Bob and for John. That's going to be whether they have investment properties, that's going to be their partners, as in their de facto partners' income, and then lots of other things, Medicare, as I mentioned before. So the main thing that you need to remember when having a partnership is that tax is paid at the individual level. It's not paid at a high level like a company. And so each individual person, even if they are in a partnership, their end tax result may be different depending on their dependents, the partner's income, their other investments, their shares, and the like. So it's really important, if you do have a partnership, that you talk to someone who has experience on make sure that the distribution is done correctly, and that the main thing is that you remember that we're taxed as individuals.
So thanks for listening. I'm Abby Morfitt, your registered tax agent.